Hey guys, welcome to the Wave Crypto Club. We talk about all things crypto. I'm sure a lot of you might not have seen this news, but this one news just came out 2 days back. It's sort of been under the hood. I've not seen many people talk about it, but I think this one thing, this just one move can have cascading effects to skyrocket Bitcoin price. Right? What is this news? What is that interesting thing? Well, 2 days back, the Bank of International Settlements they released a consultative paper, and in that paper they state that they want to allow banks to keep about 1% of Tier 1 capital, in crypto assets, in specifically Group 2 crypto assets. What is that? We'll talk about that. But what is the implication of this? The implication of this means that banks today can put some of their money into cryptos. How much is that money? I'll show you that. Before that, what is Tier 1 capital? So Tier 1 capital is essentially the capital that the bank needs to maintain its daily needs, right? It's a going concern capital. They need that. It's about 6% of the bank's risk-weighted assets. Now, how much is this capital? It's quite a lot. Let me show you that. If you just look at this stats here, right? The ICBC has about $440 billion worth of Tier 1 capital. JP Morgan has about $235 billion of Tier 1 capital. Just this chart, if you add it up, roughly touch about $3 trillion. And this is probably just the top 15 or 20 banks. If you take all the other banks, there are several European banks, Indian banks, and so on that are not part of this. If you take all that, this might go up even to maybe $4 or $5 trillion. I don't have that exact number, but at least let's do some math with the data that we have on this chart, which is about $3 trillion. 1% of $3 trillion, that's about $30 billion from the banks that is going to flow into crypto assets, right? What kind of crypto assets? Well, the Bank of International Settlements have their consultative paper in which they define or they describe what kind of crypto assets that they can go into. So they have broadly classified the crypto assets into two groups. Right? There's a group one. Right? Group one crypto assets are those that meet all conditions of the classification. In group one, there are two subsections: group 1A and group 1B. Group 2 crypto assets are those that do not meet any classification condition, and this might be of higher risk. Right? These are essentially higher risk crypto assets. Hence, holding them means higher risk. And this 1% is actually for this group 2. So I did not really see what is the cap for group 1, which means that group 1 are safer assets. Maybe there is no cap, I don't know. But group 2 is the riskier assets which have a 1% cap. So it's not just the 30 billion, it could be much more than that. We don't know that exact number, but at least let's stick to 30 billion and let's see what happens with that. Right? So they said that group 2 exposure limit is roughly 1% of Tier 1 capital. Right? We saw Tier 1 capital is about way more than $3 trillion. 1% of that might be roughly around $30 billion. That's just group 2. Group 1, maybe even more. What are the tokens in group 2? Well, it says anything that is tokenized traditional assets. Right? This has a very significant implication. These are not just cryptos. This means that any traditional asset that can be tokenized can come under group 2. Right? So there are specific cryptos that are working to help tokenize traditional assets. What are those cryptos? I'll do a detailed analysis of that, because some of those cryptos might also blow up right now, because the use cases for that will start kicking in as soon as this goes into group 2. So that means, let's say, the backers of stablecoins like a MakerDAO will probably increase in price. Then there's unbacked cryptocurrencies. Right? So these are the things that are part of group 2. What is part of group 1? Tokenized traditional assets and stablecoins. Again, so there are some set of stable coins that might go up as part of group 1 and some because of group 2, but on the whole, we broadly are able to see that some assets will get impacted, and these assets will have an increase in price because of this single move. What are those assets? I will do a big deep dive on this and then figure that out and come out with another video for that. But for today, I will just stick to the fact that from this, we know that some cryptos will definitely go up. Bitcoin definitely one of them. This will have huge implications for that. And we're just talking about Tier 1 capital, right? There's Tier 2 capital as well. What is Tier 2 capital? So there is Tier 1, Tier 2 and Tier 3 capital as part of the Basel norms that banks have to hold. Tier 1 capital is about 6%. Tier 2 capital is about 2%, so about a third. So the restriction on this is a little lesser. So like a third of $3 trillion, that's about $1 trillion. some percentage of that $1 trillion can flow into crypto. So it's not just the $30 billion. Maybe it could be much more. I'm guessing this entire thing put together might be over $100 billion that banks today hold can flow into cryptos. In addition to this, what else does this actually do? What this does is it gives confidence to other investors, other institutional investors, because this is a big move. The Bank of International Settlements deeming cryptos as an asset, telling everybody that hey, it has some risk, but you can still hold it. It is a new financial asset. This itself is a great move. This means that the money that flows in just from the banks is just one part of it. Maybe 10 times more money can flow in from somewhere else. Where is that somewhere else? Sovereign wealth funds. It could be pension funds. It could be just institutional money, high net worth individuals. It could be all those retail investors today who are very skeptical. This one move brings in a lot of confidence to the rest of the space, and this means that more and more money has the potential to flow into crypto assets. This is a big stamp on the importance and acceptance of cryptos as a new financial asset class. Today, Bitcoin is somewhere hovering around $19,000. If you look at the market cap, that's about 3.6 billion, 36 billion, 364 billion dollars. $364 billion of market cap, way more than $100 billion flowing in from some of these moves that have just happened. Does Bitcoin have a path to that 1 million? You never know, right? But what we can do is just look at the use case. 100 billion flowing in from this, maybe pension funds, sovereign wealth funds, high net worth individuals, people who want to keep their money out of government control. There's just 32 trillion sitting in tax havens. Even if 10% of that, let's say that's about 3.2 trillion, you just say 10% of that flows into this, right? You're looking at maybe close to $4 trillion or $5 trillion flowing into crypto assets in the next few years, and Bitcoin obviously is going to cover or corner most of that. So when that happens, where can Bitcoin really reach? I think there is a safe path to $250,000. There is an optimistic sense that the upper range where all this can actually help is push it to maybe $1 million. But at least optimistically, there is a path to $250,000, and all this is just another stamp on legitimizing cryptos as the new financial asset class. Welcome to the Wave Crypto Club. If you liked our video, like and subscribe for great news like this, for great analysis, for in-depth analysis, for things that probably you might miss because it's just not coming up. I will talk to you about it. I will tell you the implications about it. I will do that in-depth research to tell you what this means for you as an investor. If you want that, subscribe to the channel, tell your friends about it, hit the like button, hit the subscribe button, hit the bell icon, and of course, share it, spread the word, and be part of the Wave Crypto Club.